Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 18th of August, 2023. We had an ugly week here for the most part. Semiconductors did show a little bit of resilience, only down 5 basis points. So we'll take a look at those, of course. Bitcoin hit the worst here, down just 6% overnight and 11% for the week. Let's take a look at these charts and make some sense of it. The S&P 500 keeps cutting through these levels that had the potential to become support at the 20-day moving average, at the 50-day moving average, at the anchored volume weighted average price from this low. Now we're down to the anchored volume weighted average price from this point right here, and maybe it's going to find support here, but we don't have clear evidence that the buyers are in control. We're still below that declining 5-day moving average, and I've pointed out over a dozen times in the last week and a half, 2 weeks, that we simply don't want to be buying this market with a declining 5-day moving average. These are some of the tweets I've talked about, starting from that gap lower on August 2nd, saying, I don't buy stocks if they're below declining 5-day moving average in the market itself. Keep it simple. Declining 5-day moving average, that's that orange moving average, means it's guilty till proven innocent. If you're not following me on Twitter, you're missing out on a lot of commentary that I make each day. So, we got a little bit of a bounce here, and some people I'm sure are calling it a bottom, and maybe they're going to get lucky and it will be that bottom. But for now, I'm still looking at it again as guilty until proven innocent. That means that any bounce in here is likely to fail. Or if you're going to, get involved in it, you want to day trade it. If you can hold it as a day trade, perhaps that is, if you don't get stopped out of it and it continues to rally, then perhaps you decide to transition to a swing trade, maybe hold it for a day or two until it finds supply once again. But we're below the anchored volume weighted average price from that high and from the last touch of that. So we put another one here from that most recent leg lower. And next week, if we get some further bounce, this will be our first level of potential supply that could be resistance. What I'd really like to see now with the SPY is perhaps an undercut of this level, similar to what we saw in the NASDAQ, that we undercut this low right here. And let's just clear up some of this. We'll put that horizontal line on there again. We undercut it, but we didn't bounce up back through it. That's what I was really hoping for there. We're down to the anchored volume weighted average price from this low. And, some people are saying it's bouncing from there. And you can't really call that a bounce, not one that you can have conviction in. Sure, it bounced a point or something like that. But again, with a declining 5-day moving average, it's guilty until proven innocent. If we're going to see these markets turn, the way that I would like to see them turn would be, let me just get that out of the way and move this over so I can draw on this, is maybe Monday we rally up and it gets people all excited. Hey, it's a new week. And then we come down. I'd like to see an undercut of that low, slight undercut, and then we build a little bit. That 5-day moving average comes down like this, and then I would be looking for a bounce of more, something that could sustain itself. But for now, we're still below a declining 5-day moving average. It's guilty till proven innocent. I'm not going to try to be the smart person who finds the bottom in here, because everyone who's tried it so far, with the exception of a few people today, have been absolutely wrong. It's not about that one time you catch it. It's about avoiding those 9, 10, 15, 20 times that you don't catch the low. It's waiting for the buyers to get back into control. It's having discipline. It's listening to the message of the market. It's listening to who's in control. The Russell 2000, a couple weeks ago, we were very defensive as it got up into this level here, as other people were getting excited, calling for the breakout and calling it, the Russell 2000 is now leading the market. I was saying, we've failed in this level before. We've got to be very cautious. And as it broke below that 5-day moving average and got trapped below it, it's been guilty till proven innocent. Since then, there's been zero reason to buy this. We blew through the 50-day moving average. We through the anchored volume weighted average price from here. And as you know from my videos, I look at those levels as potential levels of support. What I don't do is just stick a bid in there, hoping that it is going to become support. This is multiple time frame technical analysis, what I wrote my first book about. And if we're in a Pullback on the shorter term time frame, it's simply an avoid. Very clear pattern, lower highs and lower lows. There was no reason to be losing your money buying this market. Now it's down to the 200-day moving average and the year-to-date anchored volume weighted average price. It might find support in here, or it might just turn sideways. It doesn't have to bounce from here. It's just ugly. There's no reason to be involved. The semiconductors, as we mentioned, they were the best for the week. This is where we ended, where we ended last week right here. So we're only down slightly, but it doesn't mean there was great opportunity on the long side. This is our week to date volume weighted average price, and you can see that's declining. We came down to the anchored volume weighted average price from this late April low, and maybe we're bouncing there. But again, there's really scant evidence that the buyers are actually gaining control. I'd like to see something like this in here, and then maybe it can start to rally. But again, it's just not there yet. Don't throw your money away. Just like people have been throwing their money away in these biotech stocks, trying to think that they are smart enough to find the bottom. We broke out of this beautiful bearish flag to the downside. It shouldn't surprise people when markets and downtrends continue lower. And it's same thing over and over again. Financials, they failed as well. They're below a declining 5-day moving average. Take a look at Apple. Apple came down to the anchored volume weighted average price from that March low. And for now, maybe it looks like on one day that it's trying to find some buyers. But here's our clear level of prior support the last week and a half is highly likely to become resistance. I think that it's likely that we'll come down to the year-to-date anchored VWAP 200-day moving average area in the next, before the end of the year, certainly. And I know a lot of people just love Apple because they love Apple, but if you look at their fundamentals, as I pointed out on Twitter, their last 3 quarters revenues have declined. Their earnings are basically flat. If you look at, or expected to earn $6.05 this year, that's 1% less than last year. And next year, growth of 8%. This is a stock that trades at 29 times earnings. To me, that's, an overvalued stock. There's no reason to buy Apple. Don't be in a hurry to buy it just because it's a brand name stock. Similar to, exactly what I've been saying about Tesla, that Tesla also has been failing at every single level where it's supposed to find buyers. It did not find buyers at the anchored VWAP from this low, and there was no reason to buy at that level, that 228 level. Was there any evidence that buyers were gaining control there? And the answer is 100% objectively no. We're below a declining 5-day moving average, making lower highs and lower lows. You can throw all kinds of things, on there. You can throw Fibonacci's, you can draw trend lines, you can draw moving averages, VWAPs, MACDs, whatever you want. The only thing that matters at the end of the day is price. You don't get paid by buying just because it's at a VWAP. It has to be you buy it, and then the buyers maintain control of the stock, and then perhaps you can get a sustainable bounce. But there's been no reason at all to be a buyer of Tesla. There's been no reason to buy, Generac, a company that's been, a gap down and it continues to be garbage. If you look at a lot of these stocks that have failed like this, like Generac, there's stocks that, people are still thinking that they're value stocks, but they have declining 200-day moving averages. Garbage stocks like Disney. I can't believe how many people waste their time with this stock. That's the 200-day moving average up there. It's declining. They reported earnings last week. I saw all these people getting excited about it, and then it failed. And that's what it's supposed to do. It's in a downtrend. Don't buy stocks in downtrends. PayPal made a new low for for since this high up here, and this has been a stock that all the way down people have been trying to find the bottom, but there is no odds. The odds just simply aren't in your favor with the declining 200-day moving average. Dish Network, same thing. Lemonade. This is one that was a popular name. And here we've got a declining 200-day moving average still in Lemonade. CVS is one that's at, multi-year lows and it's below a declining 200-day moving average. So they're not supposed to go higher with a declining 200-day moving average for the longer term. And from the intermediate term time frame, when we look at that 5-day moving average, we use them exactly the same. I wrote something about this in my anchored VWAP book in the appendix, trying to get people caught up on that. Shares of Meta, where did they come down to? Well, we can take a look at important events like this gap or this gap, and those become the pivotal levels. After a gap, the buyers regained control here. After that gap up, the buyers regained control there. Now, are they going to defend this stock at this level and perhaps see a bounce that can sustain itself? Not with a declining 5-day moving average. I'm in no hurry to get involved. As a day trader, sure, there were great opportunities in there, but I'm a swing trader. That's my perspective. That's how I look at the market. Microsoft, it's right down to the anchored volume weighted average price from this March low right here. And, the last anchored VWAP, it blew right through it. There was no reason to be involved. Now, the problem with these markets is we have a declining 20-day moving average. And next week, unless we're getting rid of this data here for the SPY, meaning these 5 days will be averaged out of the 50-day moving average next week. That means unless this market rallies up towards there, this 50-day moving average will start to look like this. And then if it rallies up there and we start to decline and we get rid of this the following week, we could be setting up for something a lot uglier. So maintain a high level of defensiveness. Don't fall for stocks that you think are a good deal. This is one that I'm short right now, Mobileye. And Mobileye, a lot of people look at this and say, well, it's a great growth name. And then they don't even bother to look at, the fundamentals of the company. The fundamentals are, the revenues have been declining, the earnings are now declining, and the stock is below declining 20 and 50-day moving average. It's below the anchored volume weighted average price from the IPO. This is one that I'm short right now. I got short yesterday, and I'm hoping that it falls down into the low 30s. Anyways, that'll do it for now. Have a good weekend, and thanks for tuning in. Be sure to give it a like, share it with your friends, all that good stuff. Thank you.